Back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button for me. I really would appreciate it. Also, hit that post notification bell so that you're notified every time I upload a new video. If you want up to 60 free stocks, guys, Moomoo is going to give you up to 60 free stocks when you open a new Moomoo brokerage account. All you got to do is get down to that first link in the description box. Click on that Moomoo link. It will have all the details about the free stocks. It's all based on the amount of money you put in your new brokerage account. Don't miss this opportunity, guys. It won't last long. So don't delay, act today. Click on that Moomoo link, open up that Moomoo account, and go get yourself some free stock. I will also send you a couple of Moomoo tutorial videos to walk you through how to use the Moomoo brokerage app. All you got to do is send me an email through my website, www.richardfain.net. Second link down in the description box. Send me an email. Let me know you've opened the Moomoo account and I'll send you out those tutorial videos. Well, today, guys, I want to walk you through what's been happening in the stock market. But you guys know I always tell you this, or at least recently I've been telling you this. There's a bull market somewhere every single day the market is open. And I hope you guys are finding your bull market. I certainly found mine today, and it was wonderful. Now, if you want to find out more about what I'm up to when it comes to this building wealth stuff, you got to get over to my Wealth Builders Financial Community on Patreon. Second link down in the description box is the website address. Click on the website. It will take you to my website. And then in the website, you'll see a join button, a membership button. It'll take you over to Patreon. You can sign up and come join the Wealth Builders. That's where I'm giving out the real game, right? But it was a wonderful day. But I digress. Let me get to business. I want to talk about what happened to stocks today. And we want to talk about the Federal Reserve. We want to talk about inflation. We want to talk about jobs report. And then lastly, we want to touch on 47 and his demands. We're going to touch on that. But let's start with stocks. Here's the headline. Stocks fall, snapping 4-day winning streak as soft payrolls report drags down sentiment. Ain't looking too good right now, right? But let's move on. The Dow Industrial Average slipped on Wednesday after private sector hiring hit its lowest level in more than 2 years, raising concerns. Trade policy uncertainty could be weighing on the U.S. economy. Here we go. Now we're back again. We're back again with this tariff policy, this trade policy. The 30 stock Dow lost 91.90 points or 0.22%, ending at 42,427 points. The blue chip average snapped a 4-day winning streak. The S&P 500 advanced 0.01% and closed at 5,970. But that's slightly less than it did yesterday, right? It closed yesterday, I believe, at 5,993. So a little slight pullback on the S&P today, while the NASDAQ actually rose 0.32% and settled at 19,460. So you got a mixed bag there, right? You got the Dow, you got the S&P slightly off, and then you have the NASDAQ slightly up. Why? Because of Nvidia pulling everything up from an artificial intelligence standpoint, right? From a tech standpoint. We're still riding that Nvidia wave right now, in my opinion. A report from payrolls processing firm ADP showed that payrolls increased only 37,000 for the month, less than the downwardly revised 60,000 in April, and below the consensus forecast of 110,000 that economists polled by Dow Jones were expecting. Now, that's not the big jobs report that we're going to talk about. This is the ADP one, which is private payrolls. So certainly a report we want to take a look at and pay attention to, but the big boy jobs report is coming out on Friday. So we really want to pay attention to that one. The report casts a pale over Friday's all-important government non-farm payrolls report, which economists currently expect to show an increase of 125,000 jobs for May, according to Dow Jones survey. So here are the three pieces of data you got coming up, guys, over the next 3 weeks that you really got to pay attention to, right? The first one is going to be the jobs report for May. That's coming out on Friday, right? Friday, June 6th. You got to pay attention to that report. Now, ADP report comes before that, but that doesn't mean the jobs report won't come in better than ADP. Remember, ADP is just private payrolls, whereas with the jobs report, it's going to include government, jobs, and everything being added to the economy. So it's more robust. Now, economists are looking for the economy to add 125,000 jobs for the month of May, because it's a 1 month look back. That's what we're looking for. Now, if we come in lighter than that, that could be a problem for stocks. That could be a problem if we come in lighter, because what that may indicate is this tariff policy, this tariff war is starting to affect the labor market. And you don't want to, that's not where we want to be, right? So that's why I'm telling you, get in position, 8:30 a.m. Eastern time on Friday. That jobs report will come out and we'll see, hopefully it'll come in better than expected and not come in, light, hopefully. So that's number one. The second thing you got to think about is next week, which is Wednesday, June 11th. That's going to be the CPI inflation report for May. Very, very important. Why? Because of inflation. Now, of course, last month in April, the tariff policy, the tariff war really didn't affect inflation. Matter of fact, inflation actually came down slightly in April. Will it do the same thing in May? If it does, that means for right now, the trade policy, the tariff war is not affecting inflation. So that is going to be a very important report that will be coming out on Wednesday, June 11th. Guys, be in position. It'll come out at 8:30 a.m. Eastern time. That is going to be either a positive or a negative catalyst for stocks. Same thing with the jobs report. It'll either be a positive or a negative catalyst for stocks. Two big boy reports. You guys need to be in position. And the third piece of data or information you guys need to be ready for is the Federal Reserve meeting, which is going to be happening on June 17th and 18th, with the emphasis on June 18th, because that is the day they will announce whether they're going to cut rates or not, or keep rates right where they're at. Plus, you'll see Chairman Jerome Powell give his, I like to call it his presentation or his speech or his Q&A to the world, right? He'll give his thoughts on where we are right now with inflation, where we are right now with interest rates, and sort of give us some guidance for the future, right? So three pieces of data, guys. You got to put yourself in position in order to be ready to go and get yourself in position. Personally, for me, I'm gonna be ready either way. I'm gonna have I'm gonna have my cash ready. I'm gonna be in position, and either I'm buying the dip or I'm already in position and I'm rallying, right? So that's kind of how I keep myself in position. You got to figure out what your strategy is. But I believe those three pieces of information can be vital to you in your wealth building process. So here we go. 47 blasted Federal Reserve Chairman Jerome Powell right after the ADP numbers came out, saying too late Powell should cut rates. So y'all already know 47 is not happy with Federal Reserve Chairman Jerome Powell. Not happy with it. He wants Powell to cut rates. He's even went on record saying that, early on, he went on record saying that he'd love to get rid of him. Now, since then, he's backed away from that because, again, you got to be careful when you're, the president of the United States and you're talking about the person that you put in charge of, making sure, we had a price stability in our economy. And you put this person in place to make sure we have maximum employment, right? Really big job. You put him in that seat. So you got to be careful because what you don't want to have happen is the market to think that Powell doesn't have any power. The Federal Reserve doesn't maintain a separate power structure from the executive office. You don't want them to think the executive office controls the Federal Reserve. So you got to be careful there. And I think some of 47's advisors pulled him back and said, hey, man, nah, we don't want to be threatening that because we already got a volatile financial markets as it is. We don't want people thinking that you run the Federal Reserve as well. So he backed off, but he's still on him to cut these rates. Some of y'all might say, well, what will make the Fed cut rates? Well, here's what I believe. Again, I'm no expert here, guys, and this is not financial advice or me trying to tell you what to do. I'm just giving you my opinion. Here's what I think would have to happen for the Fed to cut rates. Number one thing has to happen is inflation has to come down, has to keep coming down. The Fed's mandate is 2%. Inflation is still slightly higher than that. So number one, inflation needs to come down. Second thing needs to happen is that they believe the labor market is intact. Because if people got jobs and people are willing to go to work and make a wage, they're willing to spend that wage, keeps our economy going. Because 70% of our economy is dependent on consumer spending. But if people ain't got no job, or if they fear they're going to lose their job, they may stop spending. Now, that doesn't mean if they stop spending and the economy goes in the crapper that the Fed won't step in and cut rates. They will. They will use rates as a stimulus to stimulate the economy, but they don't want to really do it for that reason. They really want to cut rates when we got a good economy, 2% GDP or better, and when inflation is at 2% or less. So GDP 2% or better, inflation 2% or less. That's the perfect environment for the Fed to bring rates to what they call neutral, which is not zero, but certainly not where it's at now. Somewhere in between would be neutral. Zero and where they're at now, they want to bring it to neutral, and that's where they would love for interest rates to live in an environment where you got a GDP of north of 2%, and you got inflation south of 2%. That's the perfect scenario for the Fed. We call that a perfect landing. That's a perfect environment, right? We're not there yet. Plus, when you throw in, trade policy, tariff war, on and on, off and on, up and down, sideways, other sideways, when you're doing all of that, that don't help, right? See, a lot of experts believe the trade policy and the tariff war really don't kick in until probably July, August, September. That's when they believe it would kick in, which could potentially increase inflation. So that's what the Fed is concerned with. They're concerned that if they cut too soon, inflation goes up because of trade policy or tariff war, then guess what they got to do? they got to come back in and raise rates again, because that's one of the tools they use to beat inflation down, is increasing interest rates, right? So you know, Fed Chair Powell and the rest of the FOMC, they certainly are between a rock and a hard place when it comes to 47, because you know he wants rates cut, and he's on record as many times as he can to get them to cut it. So here we go. Even with the volatile ADP report and tariff overhangs, right? Things are probably better than feared. This is coming from one of your experts from Horizon Investments. He told this to CNBC. So even with trade policy, tariff war, ADP numbers coming out, you still got an S&P 500 that's flirting with 6,000 points. That's pretty dang on good, guys. But that can change. You get that labor report or that jobs report on Friday, and it comes in lighter than expected. And then next week, you come with that CPI inflation report for May, and it comes in higher than expected. Got some problems. So position yourself, be ready for these things. Hopefully they don't happen. Hopefully they're gonna happen either way, but hopefully we get a good information is what I'm saying. Hopefully we get good information. So here we go. Let's finish this thing up. I think the ADP report has had the history of being quite noisy. So I think we're just going to have to wait and see about Friday as it relates to the labor market. That's what I was saying a little bit earlier. Sometimes the ADP report, guys, will come in with not good results. And then all of a sudden you go to the larger jobs report and we get good results. Remember, ADP's report doesn't include all of the jobs being added to the economy, only for the private sector, basically normal companies, right? Non-government entities, right? That type. It don't include everything, where the jobs report includes everything, right? So just because ADP came in light does not mean the jobs report for May will come in light. And that's what this expert right here was just making sure people understood that. That said, he still thinks the market is range bound in the near term, adding that we're entering into a little bit of a lull in terms of market catalysts for the next month. He's just right there saying, be careful, be cautious, make sure you got your data down, make sure you're researching things, make sure you understand what's going on in the market. And that's why I'm telling you about these 3 critical pieces of data that you have control over. All you got to do is watch it and then certainly listen to it and then move accordingly, right? So that's what this gentleman is saying. They're not saying it's going to be a doomsday. They're just saying be careful, because this is going to be a negative catalyst or a positive catalyst. You just got to be ready for either one, right? Wall Street is coming off a solid stretch with strong gains in tech stocks, allowing investors to look past any worries about tariffs or the economy. I just want to pull you guys back to late May when Nvidia came out with its Q1 earnings report. See, a lot of people were sleeping on that. A lot of people didn't really understand what was happening and how important that Q1 earnings report was to the overall market. It was extremely important, because even with the restrictions, right, on Nvidia to China, remember, Nvidia cannot sell their H20, which is their inferior chip, to China, which represents, I don't know, 5-10% of their revenue. Remember, Q1, they lost about $2.5 billion in revenue because they could not sell that H20 chip into China. They also went on record and said for Q2, they're anticipating about $8 billion in lower revenue because they won't be able to sell that H20 chip into China. Even with that, even saying all of that, they still crushed Q1 numbers, top line, bottom line, and the forecast for Q2 looks pretty promising from top line revenue. It looks pretty good. So I think that gave the market a sigh of relief that, okay, we still got it. Nvidia, which is arguably the biggest name in artificial intelligence ecosystem, right, is still doing well. And it doesn't hurt that your hyperscalers and your mega caps are still dedicated to investing into their AI infrastructures, AKA data centers, large language models, et cetera, et cetera, et cetera. Also, you're seeing all of these partnerships start to form now with various companies in the artificial intelligence ecosystem. CoreWeave and, APLD, Nvidia and NVTS, and many others that have been announced in the past and are currently in the works. So you got a lot of buzz around artificial intelligence, which is critical right now to, I think, just investors in general, right? I still believe artificial intelligence is the future. And I think in order for that to happen, we certainly have to be able to have friendly trade policy. We got to have some friendly trade policy, right? Again, I'm not saying we need to be selling China our best, most advanced chips. I understand whoever controls artificial intelligence basically controls everything, right? They control the money, they control the power eventually. So I get it. We do not want China being more advanced than us when it comes to artificial intelligence. So I'm not against having some restrictions on our great American companies when it comes to them selling advanced chips to China or any of these other countries. I get it. But I still think there has to be a way where they are able to sell inferior chips, not your Blackwell, but if I've created not your H100 or your H200, but like an inferior H20 chip, I still think you got to be able to let some of these companies do some selling in order to continue to grow revenue and be what they need to be for their shareholders, right? So drop me down in the comment box and let me know what you guys think about that. That restriction on Nvidia, and I'm sure other companies who are semiconductors who sell chips may have that same restriction. I don't know that, but I do know Nvidia has it. I would imagine others have it as well. But yeah, that's kind of what's going on with that. Now let's finish this thing up. The recent gains have investors increasingly confident stocks have turned a corner on tariffs. Remember in my earlier videos this week, I've been telling you guys, maybe in my morning video this morning, yesterday morning, Monday morning, I've been telling you guys how investors are still investing and they're kind of brushing aside the whole trade policy thing. They're kind of brushing aside the whole tariff war thing because, of course, it's been an on and off type thing. And now countries are starting to say, we're just going to wait the United States out. We're going to call their bluff. We're not going to bend the knee. We're going to call their bluff. And at some point, they will back down. See, that's what a lot of countries are saying. So investors are starting to say, well, let's get back in the game. Doesn't look like this tariff war thing is going to, let's get back in the game. Now, that doesn't mean now it won't affect down the road. But think about it. When 47 came out, I believe it was yesterday or either Monday, and said that the negotiations with China are hard. It basically means it's not good. China's not bending the knee, basically. That's all that means. It means U.S. came in there and want everything and don't want to give up nothing, and China ain't having it. So that was one piece of data that a month ago would have tanked the market. It would have dumped. Much more than it dumped today. It would have dumped, right? Just on that little bit of information right there. You also understand, I believe it was either today or yesterday, the 50% tariffs on steel, I'm talking about imports, went into effect. Market just shrugged it off and kept investing. S&P almost 6,000 points. See what I'm saying? So investors are starting to kind of be like, well, we'll believe it when we see it. 90 deals in 90 days, but we got no deals. So investors are saying, something, until we get something concrete, we're going to move on and get back to the business of making money. We can't sit on the sideline for the entirety of 2025 and not return something to our shareholders, not return something to our investors. We got to get back in and start making money. Nvidia is still doing great. All your magnificent sevens did great. You got even Tesla stock starting to move back again, since now Elon is starting to move away. See, Elon is starting to move away. He's starting to get out. He's starting to be very vocal about things. Why? Because at the end of the day, Elon is a businessman. He owns multiple businesses and his shareholders are on him. And he's starting to realize that maybe I'm not 100% aligned with these folks that I jumped into bed with. I don't know what his thought process is, but he's been very vocal, right? And I told you guys months ago, I told y'all, when this thing go wrong, who are they going to blame? Elon Musk. I told y'all that months ago. When this thing goes bad, when it goes bad, which it will at some point, when it goes bad, they're going to blame Elon Musk. And I think Elon knows that, and he's starting to distance himself. So his company is even stock prices starting to move back up a little bit, right? Because he's starting to distance himself, which it is what it is, right? It is what it is. What we have to do is figure out a way to position ourselves so we're in a position to be able to continue building our long-term wealth and get to financial freedom, which is what? Passive income, right? That's what I can't say me, Richard Fain. That's what Richard Fain is trying to do is get through all the muck and get to the real deal so that I can continue my journey to financial freedom and getting to passive income. Because at the end of the day, that's what it's all about for me. The current gains have investors increasingly confident. Stocks have turned the corner on tariffs, especially after a series of reversals from 47 convinced traders the White House is mainly wielding high levies as a negotiating tool. See, this is what investors think now. Why? Because you can only cry wolf so many times before people just don't pay you no attention. See, if I cry wolf 10 times, at some point my neighbors around here gonna be like, this dude crazy. Don't even go out there. Don't even waste your time on him. He done did this 10 different times and it has been a false alarm. And that's what investors are doing right now. They're saying, hey, this is just a negotiating tool. None of this is really gonna happen. This is gonna be a 4-year negotiating tool. That's what they're saying. They are saying it's gonna be a 4-year negotiation tool. That's all it's gonna be. So let's just get back to investing in good companies, and continue to try to deliver a return to our investors and our shareholders, et cetera, et cetera. And that's really what the market's doing right now, guys. They're saying, hey man, this is just a negotiating tactic. It's gonna be around for 4 years. So get ready for it. All 4 years, this is not gonna go away for 4 years. It's gonna be here. So get ready for it. Don't let it bother you. Get your plan together and keep moving forward, right? That's what I'm doing. You guys have to come up with your own solution, but that's what I'm doing. A federal court striking down 47's tariffs just last week added hopes the market has priced in the worst of the duties, though they were later reinstated temporarily by an appeals court. 47 posted earlier Wednesday that dealing with Chinese president has been extremely hard. And that's because China ain't finna bend the knee, man. I told y'all, these people have already went on record said that we're 5,000-year-old country, man. We're 5,000-year-old country. We're not going to just sit here and let y'all come in here and do whatever y'all want to do. So they're out here, China is out here with these other countries, some of them are trading partners, and are cutting deals. Now, don't get me wrong. Eventually, I hope they come to some type of solution, because we're the two largest economies in the world. And I've been telling y'all this. We're tied at the hip no matter what nobody say. I don't care what China say. I don't care what the United States say. We're tied at the hip. We're the two largest economies in the world. We depend on both economies. China buys a lot of our debt. Japan buys a lot of our debt. They hold a lot of our debt. Yeah. So they invest money in America by buying our debt, and we pay them interest. China and Japan are two of the largest countries in the world that do that for us, right? So I think we're tied at the hip, because if China and Japan decided to dump their bonds, we're going to be in trouble. We're going to be in trouble. If those two countries decided to say, you know something, we're done. We'll take the loss. We're dumping these bonds. We're done. So we got to figure out a way to make this work. And I think we will. I think just like these investors think it's all a negotiating tool. It's a bunch of smoke. It's a big old gigantic bark, but no bite. And we see that being reflected right now in the market. Now, that doesn't mean if job report come out Friday weak or softer than expected, that could make things dip. If next week CPI inflation report for May comes out, higher than expected, could dip. Fed come out based on those two pieces of data. Let's say jobs report comes in lighter than expected. Let's say inflation comes in higher than expected. The Fed could take those two pieces of information and say, see, we told you, we ain't even reducing rates this year at all. Then what's going to happen, right? So got to keep watching the data and just keep ourselves informed as investors. We just got to keep ourselves informed. We don't have to be experts. Just, listen to the report, do you some reading, and just do the best you can, because at this point, that's all we can do, right? Like I said, in my financial community on Patreon, the Wealth Builders, all we do in that community, we're just a family of people chasing financial freedom, and we decided to do it together, and we do it on the Patreon platform. So if you want to be a part of that community, where we have every Monday night, we have a live stream at 8 p.m. Eastern time just for the Wealth Builders on the Patreon website. So if you want to be a part of that, like I said, we got an active community chat that we're in there every single day. Tips, nuggets, best practices, what's working, what's not working. Of course, we do not try to be experts. We do not try to tell people what to do. We do not try to guarantee anything or any of that kind of crazy stuff. We don't do that. We're just a community of people who've decided we want to come together and build wealth together. And if you are someone that says, hey, man, I'd love to try to be a part of a community that is a traditional investing community that, look at real estate investing for income, paper assets, starting businesses, side hustles, all that kind of stuff. We discuss that kind of stuff on our platform. So second link down in the description box is my website link. Click on it. It'll take you over to my website. I got some digital products there. Certainly you don't have to buy anything if you don't want to, but I would recommend you take a look at them, see if there's something in there that could help you increase your financial literacy, that you're willing to make an investment in yourself. That's on you. You don't have to do that, but it's on you. And then while you're in the website, look for the join button. Look for the membership button. Click it. It'll take you over to Patreon, and you can sign up and come join the Wealth Builders and be a part of our family. Like I said, none of us are experts. We don't try to be. I'm certainly not one. I'm just a guy that's been doing this for 30 years, the slow way, just looking for good ETFs, looking for good companies, and hoping, I can make a move that can increase my net worth, and at some point down the road, I can get to passive income. That's the name of the game for me. It's about passive income so I can take care of myself, right? When I'm no longer able to work. And a lot of people over in the Wealth Builders, that's our main goal. We want to be able to take care of ourselves when we can't work anymore. And the only way we're going to be able to take care of ourselves when we're not able to work anymore is if we have assets that generate income, passive income, assets. So that's what we talk about. So if you're interested in that, come check us out. Like I said, if you want up to 60 free stocks from Moomoo, that link is down in the description box. It's the first link. Click on it. It'll give you all the details on the free stocks, what type of deposit you need to make in your new brokerage account in order to qualify for it. Get down in there, take a look at it. If it's something that you feel like makes sense for you, try it out. If it don't make sense for you, pass it on by and keep moving. All right? Appreciate y'all, man, for checking me out. I'm going to get on out of here. I'll see you guys tomorrow. You know, just remember that this 3 pieces of data that I just walked you through, get in position, take a look at it, be prepared, look at it, see what it does for you. I think it'll help you, but you gotta educate yourself somewhat in order to be confident, right, with your decisions, with your money. So make sure you pay attention to these next 3 weeks and all this important data that's gonna be coming out. If you're stopping by the channel for the first time, please consider subscribing, share the video, smash the like button. Thoughts become things. If you can see it in your mind, you can hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. Stay healthy, get wealthy, and I'll catch you on the next video. Thanks.